Welcome to part of this special webinar series. This topic being around how to create unshakable financial foundations in your life. To give you a bit of background, for those of you unfamiliar or who haven't joined us on a program before, 10,000 Girl is a not-for-profit social enterprise geared to create the time and the space and provide the tools for women and families across Australia to empower themselves financially and understand some of the steps and resources out there available to improve your financial picture. Our aim is to make finance social and fun, and we do this by providing a 6-step process that walks people through all the different elements that make up a financially well situation. So to give you a bit of an overview, of course we're just going to delve into a couple of the topics today, but to give you a bit of an overview, we always start with and reiterate how important it is to be clear on your life goals. So casting all the money thoughts away and focusing on what type of life do you want to live and what type of things do you want to do and have in your life over the different phases. Why this is so important is because only then we can flip that around and see, okay, well, if that's the type of life we want to lead, what do we need to do financially to get there? How big does our nest egg need to be? What sort of liquid or available financial resources do we need to have at different areas, at different times of our life? So that is just so key to setting yourself up in a strong financial situation. The next step is obviously having strong financial foundations, and this is what we're going to look at a bit today, particularly having a look at good debt management and creating the buffers and ensuring that you've got sufficient insurance in your life to, when things don't go to astray, that you can still be in a secure financial situation. These first 2 steps are incredibly important to have strong before you dive into making major investment decisions throughout your life. And so in the 6-step money makeover program, we talk about some of the different investing principles and some of the behaviors and characteristics of investing in cash, property and shares, and some ways you can do this and some resources you can gather together to make sure you're making great financial decisions throughout your life. We then have a focus on super and tax and estate planning, and importantly, how to build a really strong support network. So this free webinar series is part of sharing with you and introducing you to some of the great experts and resources available for you, and we've got 2 great experts with an incredible amount of expertise to talk about debt and credit scores and general insurance with us today. If you are interested in a more broad program that can help you, the next 6-step money makeover, which is a series of 6 webinars that walk through each week each of these topics. The next one starts next week on Monday the 20th of June. So we'll actually send you a bit of a promo code if you're interested in that. Now, importantly, 10,000 Girl doesn't provide financial advice, and we really encourage you to seek independent professional advice before making the major financial decisions in your life, and we'll provide some resources on how to find some of these people later in this session. We're really here to create the time for you to have a think about how this information relates to your personal life and to provide some tools for you to be able to go and seek advice and ask really great questions to get the information you need. For everyone who does the 6-step money makeover program, we have links with Good Return, which is a microfinance organization, and the idea is that as each of us increase our financial capacity, we can have this incredible impact just with a few dollars enabling women all around the world to start new businesses and create new sustainable income streams and increase their financial capacity. So we really get excited at 10,000 Girl about the ripple effect of each and every action step you each make. So we're able to run these free programs because we've got a great panel of generous industry partners who we work with. Financial Literacy Australia and Rabobank are our major partners over this 2-year program. We work with the Financial Planning Association, with HESTA, with the Tax Office, and today we are hearing from the general managers of Understand Insurance and CreditSavvy, which, as I say, are 2 really great resources. So welcome to Dirk and Campbell. Now, these 2 guys have over 20 years of financial services experience, and which is a wealth of knowledge and information and networks and resources to share with us today. Dirk is the managing director of CreditSavvy. So a few years ago, he had a vision to provide a website where people can access their credit report and understand their credit score for free. And just since launching in March 2015, over 100,000 people have used this website. So it's a great website with some really great information and tools. And so Dirk will take us through that. And we've got Campbell, who is the General Manager of Communications at the Insurance Council of Australia. So one of the things that the Insurance Council do is manage a consumer financial wellbeing website, which is called Understand Insurance. So it's a great resource, which we'll also talk through, to help people understand about general insurance and some of the tips and tricks to make sure that you have sufficient cover in those areas of your life. So welcome, Dirk and Campbell, and I'll throw to you, Dirk, first. Tell us, why do you do what you do? Why are you passionate about people understanding their credit scores?
Yeah. Oh, hello everyone, and hello Zoe and all participants. Yeah, thanks for inviting CreditSavvy today to help shedding some light on credit reporting and credit history, and also maybe a little bit more about credit in general. But back to your question, why am I excited about the things that I'm doing? It's really all about helping people at the end of the day, and building a website that allows people to access information that's relevant to them in terms of their finances, providing resources for them to understand credit better, and giving them insights in how credit works and how their credit score it can help them, getting ahead financially. I think that's what we're all about, and a lot of it is also about empowering people to understand this information. Firstly, get that information about yourself that is already being used today, and in the past you may not have been aware of the type of information that was being used by the banks and financial institutions, and basically everybody that extends credit to consumers, and how that information, how you can use that information for your own advantage. And that's really what we're all about. So our website is really heavy on content around credit reporting and around how credit reporting works in terms of using credit wisely. So that's kind of what we're about, and that's the reason why we're all excited to be part of CreditSavvy.
Great, thanks, Dirk. And Campbell, what's your interest in insurance? And tell us a bit about Understand Insurance.
Understand Insurance is a program operated by the Insurance Council of Australia. It's recognised that for most Australians, general insurance, it's a bit of a grudge purchase. It's the kind of thing that many of us take a ticker box approach to it, and yet for most of us, it also serves the purpose of protecting our major assets, which is either our person or our homes, cars, and businesses. So Understand Insurance was designed to help consumers take control of their insurance needs, and it walks people through the entire process from determining from explaining the basics of insurance through helping them understand whether they, in fact, they need to buy it or want to buy it, and then the factors that can go into making the best decision that meets their needs. And it looks at a wide range of insurance products, most of the major products that you find on the market, from anything from home and contents through to renters insurance, through to landlord cover, small business cover, and also explaining things like excesses, claims, how to lodge claims, and how to work within the dispute resolution system. So it's really a go-to-woe service, and it's without brands. It doesn't drive anyone towards a particular product or company. It's brand agnostic, and within that, of course, there are tools that consumers can use to take control of their insurance.
That's great. So we'll have a bit more of a look at some of those tools on both those sites in a moment, which will be fantastic. So thank you all very much and for joining us today. And so in this webinar, we're going to talk a bit about debt. So we're going to talk about the good, the bad, and the ugly. And if you've got a few different debts, whether you're online now or you're listening to this recording, we're going to walk through a really simple strategy to get on top of your debt, and then Dirk will take us through credit reporting and the importance of looking after this element of your financial life. Then Campbell will obviously talk about some of the general insurances and some tips to make sure that we are covered in a sufficient manner. So should anything go astray in our lives, we will be financially okay. We want you to walk away with the confidence that you're heading in the right direction and some peace and security that there are a lot of great resources and support out there to guide you to improve your financial picture, which isn't just a sort of a one-off thing. It's something that we need to do ongoing throughout our lives. So in the full program, we talk about a few different elements that make up or that help us lay really strong financial foundations in our lives. So obviously we need to understand what's coming in and what's going out, and we need to look at our net worth. So what do we own and what do we owe? And we will talk a bit more about this and how to use your net worth when managing your debts, as well as doing some scenario planning and making sure that you've got the right insurances for you in different phases of your life. So let's talk a bit about that. What is your net worth? So you've got every one of us have assets and liabilities, and assets are something we own and liabilities are something we owe. And our net worth is made up by working out your assets minus your liabilities, and hopefully that number is positive. So why know our net worth? There's a few different reasons why working out your net worth is important. And before we go through these reasons, let's have a bit of a brainstorm about what are some of the assets that people can have in their lives. So please write them through in the question box, and we'll actually write them up on the screen, and so we can do it together. If you want to work out yours as we go, just simply put 2 columns on a piece of blank paper, assets and liabilities, and start to sketch out. So some of our assets might be our home, our car, we might have some furniture, some money in our super fund, we might have cash in the bank, we might have investment property, we might have some share portfolio, we might have a business. There's a lot of different assets that we can have, and obviously when you go into the bank they're not going to let you include your car and your furniture, but often when you're starting out on your financial journey, it's a little bit more encouraging to include some of those items that you have of value. And the reason is because then if you go over to your liabilities column and let's say you've got some credit card debt, you can then work out, you know what, I want to get rid of a bit of that credit card debt. I've got a pretty amazing shoe collection here. What can I sell here to get rid of some of my debt? So that's one of the reasons how you can use your net worth. You want to make sure you're comfortable with your debt position, and if you're not, and if you want to decrease some of your debt, what can you do about that? So some of your liabilities include credit card, what else? Personal loans, mortgage on an investment property or a home loan. I'll explain soon why we differentiate them. You might have something like a margin loan on shares. You might have a store card or one of those 3-year interest-free. You go into Harvey Norman and buy a couch. We'll talk about why they're a bit dangerous shortly. So there's all different types of liabilities also. And there's a few different reasons why we can use our net worth. So we've talked about being comfortable with your debt position. It's also about planning for the future. So your net worth is a snapshot in time. And you want to see, okay, well, where am I now? And where do I want to be in 5 years' time or when I retire, and what do I need to do to get from where I am now to where I want to be? So it's a great tool to just check in on how you're going. Also, if you've got goals coming up, like let's say paying for kids' education or a time off work to study or have children or whatever it might be, you might look down and say, you know what, I need to, be able to access some of my money. And so if you've got a bit of a share portfolio and you need some money in a few years' time, you need to start pulling that out of the growth assets and making sure that you've got cash available or money in an accessible form when you need it. So you're never at the point that you need to sell one of your sort of investments at a time where it might not be necessarily the best time in the market. So you want to be regularly checking in on how you're going, not only your total net worth, and is that growing in time if you're in that sort of accumulation phase of your life, but also, do you have money that's available for the different goals and activities that you have throughout your life. Also, the bank will want to know your assets and liabilities. As I said, they might not count your car and your furniture, but they'll certainly look at your different your cash levels and your different investments to be able to let you know how much you can borrow if you're looking to buy a house or do something like that. And of course, and we'll talk more about this with Campbell shortly, about scenario planning. So asking ourselves the tough questions. Well, what happens if I, have a car accident? My car might be gone, but the car loan's still there. And would I be able to cover that? Do I have some money in the bank, or do I need to consider some form of insurances so I'm not left in a pickle whatever gets thrown my way? So there's a lot of different ways we can use our net worth, and people generally get assets, but it's liabilities that trip us up. So we want to have a closer look at liabilities. And I want to ask you a question. If the average credit card debt is around $3,500 in Australia, and that's the average of not just the people who have credit cards, but everyone. So if you're just averaging the people who have credit cards, I'm sure it's higher than that. And let's say that you're paying 21.5% interest, and you are paying minimum repayments each month, so you look at what's owed on your statement and you pay that off. How long do you think it would take you to pay off that $3,500 credit card debt? Have a guess. How long do you think it would take? 10 years? More? So 20 years? More? It would take 90 years, over 90 years, and you'd pay $27,000 worth of interest on a $3,500 credit card debt. So this is important to know, and even if you've got some credit card debt and you're thinking, holy moly, I don't want to pay that much debt, there's good news. So compound interest is a miraculous thing, and even if you don't have the money to just get rid of your credit card debt, even if you chose to pay a higher payment, let's say $150 a month instead of the $70, you bring your timeline down to between 2 and 3 years, and you pay $1,000 interest. Now, $1,000 interest is still a lot of interest to pay on a $3,500 credit card debt, but it's much better than $27,000, right? So I want to, before we flick to Dirk, I just want to run through a really smart mathematical debt repayment strategy. So if you are feeling a bit in a frazzle with your debt at the moment, the best way to do it is literally, or if you know someone who's a bit stressed by different debts at the moment, walk them, get the blank piece of paper, draw 3 columns, and walk them through this strategy. So the first step is to categorize your different debts in good, bad, and ugly. So ugly is that sort of high interest, no sort of assets behind it. So it might be credit card debt or some personal debt or the store cards or payday loans, etc. What kind of debts would we say, if they're the sort of ugly debts, what type of debts would we include in the good column? So what do you think that it might be, that we might be considering as good? So if the definition is around that, like the interest is tax deductible, and that's because the loan is on an income generating asset. So it might be an investment mortgage or a margin loan or a business loan. We might even put our HECS or study debt in that because it's paid in pre-tax dollars, and hopefully it improves your capacity to earn income. So there's 2 sort of quite common debts that are that we haven't put in good or ugly, and they are your home loan, which it's not bad, but it's not ugly and it's not awesome because it's not tax deductible debt, but you do still have an asset behind it. And in the case of your home, you hope that asset is appreciating over time, so it's on the good side. And then you have something like a car loan, which we might even put on the ugly side of bad because your car would depreciate over time. But still, if you got in a pickle, there's something there behind that debt. So that's the sort of first step in, and you categorize your debts and then consolidate any if you can. So ask your financiers if you can consolidate it. Minimize all repayments and prioritize. Start with the highest interest ugly debt first and put every spare penny you have on that high interest ugly debt until you get rid of the first one. And then you work on the next one and work methodically through that. So if you have been in a debt pickle before, you probably had that experience of, you sort of rob Peter to pay Paul, and you just pay the minimum repayments, and it can be really stressful. And so by having a bit of a methodology to work through, it can give you an enormous sense of relief. And so, of course, then once you've got a bit of a strategy, you can look at where you can find more money and how you can make more money to strategically repay them as fast as you can. Now, Credit Smart is sort of the industry credit industry body, and then of course there are some credit reporting sites. So let's have a look at CreditSavvy, and I'm going to throw to you, Dirk, and to take us through some of the great resources and some of the tips and suggestions you have, and the reasoning why it's so important to understand your credit score.
Absolutely. Thank you, Zoe. And I'm still recovering from the 21% interest rates and 90 years to pay off your credit card. Those are astounding stats. And look, one of the reasons, we'll touch on a little bit later is obviously there's lots of good deals around. So having a good credit score will help you shopping around for better deals, which can reduce your interest charges. So that's one of the things we'll look at a little bit later. But so we're going to cover a few basic things here, which is fairly new to the Australian market. It's very well understood in other markets, particularly in the US and the UK, credit scores, and it's part of daily life over there. Over here, it's still fairly poorly understood by most people, and a lot of people in the research we did a couple of years ago now, is that 80% of people don't really understand what a credit score is, or what their credit score is specifically, and what it's all about. So we will talk a little bit about that. So how can you improve your score, and why is it important to have a good credit score, as I mentioned just then. So looking at the first question, what is a credit score? Basically, we're all familiar with what a score generally is, but a credit score is basically an indicator of your credit worthiness. And if we look at the next slides, CreditSavvy produces a score or displays a score which is between 0 and 1,000, and generally it is the higher the score, the better it is. And what it is a score is being used by credit institutions, financial institutions, and that includes utilities to assess your credit worthiness when you apply for credit. So when you go to the bank and say, look, can I please have I want to apply for a loan, they will look at your serviceability, and they can also look at your credit history. And the credit history generally includes how you've behaved in the past when it comes to credit. Have you had any defaults? How many applications have you made over time? And of course, also look at what type of applications have you made over time and with who. So it's important to take that into consideration as well. So the banks use this credit score, have used it for a long time, and they will continue to use this as part of their assessment criteria when you apply for a loan, and that includes mortgages, credit cards, personal loans. And in Australia, as I said, it's in the past it's been hard to get that information. It was not freely available. Obviously, with sites like CreditSavvy, you can now pretty much instantly, and for free, access your credit score online. And obviously, that is helping you to understand how the banks rank you and how they look at you in terms of risk. But at the end of the day, this comes down to risk. If they're going to say, am I going to borrow this person $1,000 for whatever reason, is that going to be, if that person has that person been responsible in the past or not? So basically, that's reflecting your credit score, and basically, the higher your score, the chance of your being approved for that credit score is generally, assuming you can service the loan, but that's obviously helping to support your application. And as I said, it's not just banks, but also more and more you find now that utilities, telcos, gas companies will use do a credit check, and therefore it's important to have this in good order and understand what it is that determines your score, and how you can manage that, improve it where you can, and also make sure that it doesn't that you actually look for errors on your file as well. That's another thing that people sometimes overlook, but that's important too. So let's have a look at the next slides. So as I said, CreditSavvy, we basically provide access to your credit score via the website. As I said, you can get it in 60 seconds. I think that's the quickest we've been able to time it. So we give you access to your credit score, but also what's behind your credit score. So that's important to get some context around why is it what it is. So that includes your applications, which generally are called credit inquiries, the credit inquiries are the credit inquiries you've made over the last 5 years. So one thing to understand about credit scores is that you will need to, the things you do today can have an impact well into the future. So that's up to 5 years, and that's both for your credit inquiries as well as for defaults. So that's another part of your credit report, that is the defaults. And the default basically is when you're unable or unwilling to pay any consumer credit product for and what goes on your credit file these days, any amount over $150, and it hasn't been repaid for 60 months, 60 days. So that will be recorded as a default. So these are the things that sort of make up your credit file. As you see on the slide, it is worth also checking your full credit report from any of the 3 credit reporting bodies that are in Australia. But the first step is probably good to have a look at CreditSavvy. We've got over 140,000 members now that have accessed their credit score via CreditSavvy, and that's increasing very rapidly every month because people understand the value of the scores and understand how it can be used and how it also and how to use it particularly also in a positive way, so they can negotiate better deals with their banks. We'll look at that in a moment. One of the questions we get asked are, well, why is my credit score what it is, and how can I improve it? And that's kind of a big deal for people because obviously it's very personal. If you've been responsible with debt and you've shown your good behavior in the past, that's all wonderful. But some of the things that you've done in the past will still be on your file for up to a period of 5 years, right? So one of the things to look at is how many applications have you made over the last 5 years, and also to look at what sort of applications are there. You mentioned earlier on, Zoe, payday lenders. If you look at payday lenders, there are dangers not just in terms of the interest rates and fees you're charged, but also the impact it has on your credit score, because they're effectively a lender of last resort and really can bump your credit score down very significantly. Firstly, when it comes to tracking your responsible person when it comes to debt, it's all about repaying your loan and bill repayments. So the banks can now track your repayment history for consumer credit products for a period up to 2 years. So basically, if you miss a payment for more than 2 weeks after it's due, it can be recorded on your credit file, and can stay there for a period up to 2 years. Any default, so if you go one step further and say, I'm not going to repay this bill, then basically, once that's noted on your credit file, will be there for 5 years. So, in other words, these are long-term implications for the things you do today. So understanding that is important. And the same thing with credit inquiries. They stay on your file for 5 years, and making too many applications in a short time actually will hurt your credit score. And we've seen instances where it can decrease your score by 200 if you have multiple credit inquiries in a space of a few months. Because for the credit bureau that calculates your score, they basically say, oh, it looks like this consumer might be in distress because they're looking for money. And of course, that's never a good sign. If you want to borrow somebody some money, you need to make sure that you get the money, that they repay the money, and that they're good for it. The next point, it is important, as I said earlier, to understand, okay, the credit reporting will look differently at a type of application. So a home loan application could be seen differently to a payday application, because obviously you're in a different space. If you're buying a home, it's different to when you're looking to pay for your next bill and need $1,000 quickly. So those are things that will impact your score. Also important to understand that obviously there is information being gathered by the banks and by the credit reporting bodies, and sometimes that the information might be wrong. So it's also important to check your score truly from that point of view and see if there's any information that's on your file that you don't recognize. And it could be just a mistake, but it could also be a case of identity fraud. More and more, identity fraud becomes a bigger issue, and we see lots of reports every year that's on the increase. And one of the things to protect yourselves, actually, monitor your score. So what we do at CreditSavvy is we basically give you access to your score on a monthly basis, and we send you alerts if anything changes on your credit file. So that's one easy way to track if anything is awry with your credits. If it might have been compromised, your credit identity might have been compromised by a third party who start making credit applications on your behalf, and that's very common. So those are kind of yep. Sorry.
We had a few people email us in questions, and one was about applying for loans, and you know how you contact the banks, a few different banks, and see, you know, what type of loans are available and stuff. At what point in that process is it lodged on your credit report?
Very good question, and that needs to be well understood. Well, look, the credit providers can only make an official inquiry as part of an application for credit. So if you just talk to the bank about, you know, could I get this home loan? Would I qualify? That's all pretty innocent. The moment you go through with an application, and you'll find that you'll give them permission to do a credit check as part of your application. So once you sign the form, they can perform a credit check, and they will then contact the credit bureau. So it's only when you proceed with an official application that the credit providers will contact the bureau, and in that instance, and only in that instance, it will be registered as an inquiry, a credit inquiry on your credit file.
Yeah. Okay. Right.
I hope that makes sense. And of course, and it's obviously you make sure that you don't do that too often. I mean, it doesn't mean there are plenty of resources online to see what rates are available, and that you can do that at our side as well, just to compare. And you can always talk to the bank, but making an official application is the next step, and that's when you start seeing an impact, having an impact on your credit score.
Yeah, great.
So I hope that answers the question. Look, the final point as part of my presentation is really, well, why should I care about a good credit score, really, and why is it important to me? Well, firstly, it's about access to credit. So, as I said earlier, the banks will look at your ability to repay the loan, and they'll look at your credit history. So it's really all about getting approved for this loan. So if you want to buy a house, or if you need to borrow some money, it's great to be in a position to say, well, my credit score will not be an issue because I've been responsible with credit, and I've shown the bank that through my good credit score that I'm a responsible borrower. So basically, that's one part of the equation. The other part is, and that comes back to your earlier example where people might be stuck with a 20% interest rate, is that what we'll see now is that the introduction of risk-based pricing. And what that is all about is that basically it will be that basically means that when you link it to your credit profile, your credit scores, that the higher your there are products on the market that basically reward you for a good credit history. So there are products now in the markets across personal loans, and we expect to see that across credit cards as well in the future. It's basically meaning that the higher credit score, the lower the interest rate is that you're paying. And we see that today in the peer-to-peer lending space. We see that in personal loans, and possibly we'll see that in home loans and credit cards in the future as well. So that's the other side of the equation. So if you want to shop around, there's obviously you need to have a good credit score. And the other side, there are products out there that reward you for having a good credit score in the first place. Of course, you need to be careful, because that's the trick. Of course, if you shop around too often, it will negatively impact your credit score, which will have an impact on your ability to get credit in the future, or what you would pay for interest on your next loan. And this is going to be increasingly important. The banks, obviously, this is going to be more transparent, and that's what we're all about, bringing this to the surface, because a lot of people don't understand. It's a reasonably complex issue of credit reporting and credit scores, so we're helping people understand that. And then we see some real value in managing that, in basically in the ability to get cheaper loans if you look after your credit history. So that's kind of the rubber hits the road, right?
Yeah, I mean that's a great incentive to make sure that you're looking after your debt position, isn't it?
Yep, most definitely. And these are all fairly new concepts for the Australian markets. Risk-based pricing is probably, you've seen it a little bit around personal loans, but now we have the peer-to-peer lenders that have set up shop in Australia, and they actually actively advertise, their rates that they're paying for people with good credit scores. So that's where you get a clear example of how this is important in the real world, so to speak.
Yeah, great. So thanks, Dirk. And there might be some questions that come in shortly. So let's say, okay, got your debt under control, understand your credit score, regularly keep engaged with that and updated with that. What else do you need to consider to ensure your financial foundations are really secure, and that whatever happens, you'll be fine? And so we're going to take a bit of a look at insurance, specifically general insurance. So in the longer program, we'll talk more about life and wealth insurance. That's income protection, life, TPD, trauma cover. But we're going to talk to Campbell now about scenario planning and how to be a good risk manager. And I mean, there are so many different types of general insurance, and that the Understand Insurance site is a great place to start when exploring, and understanding the different levels of cover and areas of cover that are available. So Campbell, tell us a bit about, general insurance.
Thanks, Zoe. As I mentioned in the introduction, Understand Insurance is a program of the Insurance Council. It's part of our consumer service, I guess. We think it's very important that the industry does its best to help consumers understand the products that they're buying and the reason that those products can serve a purpose in their lives. Now, one of the sheets that you showed up earlier is actually a really good way of assessing where your insurance needs might lie, and that is looking at the assets that you have. So home, motor, travel, business, other forms of small business, even liability issues relating to uses of properties. Now, Understand Insurance is very much focused on plain English. It breaks the concepts into parts that are fairly easy to digest, and there are also a number of other resources on the website, fast facts and tip sheets that many consumers find quite useful. And those fact sheets are used by consumer groups, by financial counsellors, by governments, by government agencies, and by electoral officers to help consumers as well. There's also a series of videos and testimonials, and they're all unpaid testimonials, real people. And there's, as I said earlier, this is not a branded exercise. The only brand on it is Understand Insurance. There are no insurance brands. The insurers aren't involved in how this material is prepared or the resources that are in it. This is purely our work. So it sits above and beyond the work that individual insurance companies are doing, and it supplements their work in many places. Now, one of the key resources in Understand Insurance is insurance calculators. And the reason that calculators are important is that for most general insurance products, the customer determines how much cover they're going to require for their major assets. And the calculators that we have on this website are for home building and for contents. They take a couple of minutes to fill in, and they help the policyholder work out exactly the limits of their policies, how much cover they need. Now, the reason that this is absolutely essential is that about 8 in 10 households are underinsured for their home and their contents. And that means if the worst thing were to happen, typically a house fire, or in many parts of Australia where a house is very badly damaged or even destroyed by a natural disaster, an underinsured property is unlikely to be able to be rebuilt to the same standard as it was previously. So ensuring that you're not underinsured lowers the risk of, if something does go wrong, being unable to pick up the pieces. Now, it's likely that in most people's, in the duration of someone's mortgage, you're likely to make at least one, if not two, insurance claims on either your home or contents, or even both. So getting those numbers right is an essential part of your financial well-being. We can click through to the next page.
That's great.
So choosing the right policy is the first consideration. Now, the best thing to think about is where you live and the kind of products that you need. If you know that you live, for instance, in a cyclone-prone area, what kind of cover and what limits to the cover are you likely to need? If you live in a flood-prone area in particular, is flood cover something that you're going to need? Now, these risks are real. These risks are factored in by insurers when you pay your premium. We talked about risk-based pricing earlier. That applies to insurance as well. There's a bit of a fallacy that insurers simply look at your postcode and say, yeah, that's the risk, and apply that to all policies in that area. That is not true. Insurers have extensive data on property, and they price down to the individual property and the policy holder. And the better the data, of course, the more fine-tuned that premium can be. And that's particularly important where you are in an area prone to natural disasters. We also see a lot of focus on the price that you pay for insurance. Now, it's not simply a matter of looking at a comparison website and saying this policy is the cheapest and therefore it's the one I should buy. Every insurer's policies are different, and those differences can be quite significant when you look at them and when you compare them. So the key tip around buying a policy is don't buy the cheapest, buy the one that is actually the most suitable for your individual circumstances and has the inclusions, the policy features that you need. Now, yes, I can see that a product disclosure statement can be a lengthy read. Some of them do go to 80 pages. But once you, but it really is an investment of only 5 or 10 minutes to read through it and get an understanding of what exactly it is that the policy will cover you for, and also the obligations that the insurer has towards you, the customer, and also the obligations that you as the consumer have to the insurer. And that's things like thorough disclosure of anything that might relate to your odds, your chances of lodging a claim with the insurer. Can you flip to the next page, please? So price comparison websites are making inroads into the market, and they have some value, but the reason that I'm very vehement about being careful of them is they tend to cover only 2 to 3% of the market. They tend to have only a very limited view of the products available, and most of the big insurers won't take part in them because, like with everything, if it's really, really cheap, it may not suit the purpose for which you're intending to buy it. So there are other ways that you can save money on your insurance without compromising your cover. One of those is to shop around, compare quotes, and then look at the features in the policy to make sure that you're actually comparing apples with apples. Many insurers offer bundled discounts. So if you purchase several policies with that same insurer, you'll get a discount across the premiums. You may be aware of a thing called an excess. It's a contribution that the policyholder makes when lodging a claim. Now, an excess is designed to as a co-payment, so that the policyholder is still taking a little bit of risk themselves. It means they're less likely to claim for things like common maintenance on a building rather than an unexpected event that does cause damage. And the other thing is, so accepting a higher excess will substantially lower the premium that you pay. An interesting fact, though, is even where consumers are offered very low premiums in exchange for a slightly higher excess, most of them will still choose to pay a lower excess, even though that represents a higher premium. It's an interesting piece of behaviour. Now, key to this, of course, is withholding information can actually affect the likelihood of a claim being paid either in part or in full by your insurer. It's essential that you understand that duty of disclosure so that the insurer can pay you what you're owed or help you rebuild if you need to make a claim. And if I can reassure people, about 98% of all claims that insurers that lodge with insurers are actually paid by the insurers, and very few claims end up falling into a dispute with the insurer. Now, on the next page, I can talk in a little bit more detail about non-insurance and under-insurance. Non-insurance is a significant community issue. About 1 in 20 Australian households do not have building insurance. So if something happens unexpectedly, whether that is from a natural disaster or more commonly a house fire, which usually starts in the kitchen, and a property is destroyed or badly damaged, the question that the householder would need to ask is, how am I going to fix my life from here? Some house owners have extensive financial resources and they choose to self-insure, and that, of course, is an entirely valid decision for the individual, so long as they can pick up the pieces. But for most of us, that's simply not an option. We're going to be very much reliant on family and friends or other forms of credit or selling other assets simply to pick up the pieces and resume even the basics of a normal life. And I see it time and again in disaster zones where properties are destroyed by floods, by bushfires, by cyclones in particular, where they either don't have any insurance or the insurance cover they have just simply isn't enough to rebuild the property. So understanding and taking control of those financial decisions helps avoid the risk of a property being underinsured when you do purchase it. Now, we have free insurance calculators on understandinsurance.com.au. They are free and independent. They give you an idea of your sum insured. You can use them when you're buying insurance or when you're renewing your insurance, just as a bit of a pulse check. Do I have enough? Well, here's something independent that I can check to gauge whether I'm on the right track. There's also a home insurance inventory. So you can list in that your contents, what you own, how much you paid for them, some serial numbers, and it lets you assess, again, whether you have enough sum insured. And it also helps, if you do need to make a claim, to provide evidence to an insurance assessor. So an insurance assessor comes around if you make a major claim and checks it out and sees what you're entitled to under your policy. And on the final page is just a couple of other resources that may be useful. The first one is the Insurance Council's corporate website that explores many of the issues that consumers confront every single day, but from an injury perspective. We've only in the past couple of minutes just announced an update of the insurance losses from those storms that hit Queensland, New South Wales, Victoria and Tasmania less than a fortnight ago. And we're sitting at $235 million in insurance claims. So far, that's 32,000 claims. That's a lot of homes and a lot of businesses that have been affected by these storms. And yet insurers had assessors on the ground while floodwaters were just starting to recede in Tasmania. So they're very much focused on helping their customers, organising temporary accommodation, organising emergency repairs so that many of these properties are capable of withstanding the storms that we expect this weekend. The other resource that we're pointing to here is findaninsurer.com.au. Now, this is a resource that provides a list of insurers that offer certain products. It's not a rating tool or anything like that. It simply provides a list. So if you're looking for travel insurance for a senior, for instance, it will give you a list of insurers who specialise in travel insurance for seniors. So that is a very useful tool for many consumers as well. And I'm happy to expand on any of these points should anyone require it. And thank you for your time.
Thanks very much, Campbell. And yeah, it's just all about having these conversations and thinking about the different scenarios before an event happens, doesn't it? And there's obviously great tools around. I mean, I hear a lot of stories about, you know, people pulling out insurance policies or finding they don't have insurance policies, and the same goes with wills, with estate planning and stuff, after an event, rather than doing it proactively as an annual review or when your circumstances change. And I just think it can be a total game changer in your life, can't it? And so thank you both for sharing all those great resources. Now, we've got a quiet crowd. I know there was a lot more people that registered than have tuned in live. So I'm going to ask each of you if you've just got a final tip to share, and then we'll make sure that this recording's available, because I know that there's a lot of people that are interested in these topics, and so this will be a great resource, and we'll make sure we put some of those links to those different calculators and blog posts and articles on both your websites, because yeah, well, I personally and in all our workshops we use them both often. So a final tip from each of you, or food for thought, or something that you see people making a mistake perhaps, and that, you know, what we can each do or think about to prevent that happening.
Yeah, I'm happy.
Campbell, will I throw to you first?
I'll let Dirk go first.
Okay, go Dirk.
Yeah, cool, thank you. Look, I think one of the things I noted earlier is that a lot of people never check their score, don't really know what it's about, and really they are. Sometimes people are a little bit afraid about what they may find out, but it's not all that bad. I think, you know, so having basically having, don't be afraid to go and check your score. It is all part of taking control, which is obviously one of the steps in your plan, and it's really all taking charge of your financial destiny. So it's really not as scary as people may think it is. And I would encourage people to take an interest and really try to understand the basics around credit reporting and how your credit score plays a role in your financial goals.
Thanks, Dirk. Now you dropped out a bit, but I caught that it's about, you know, having that engagement with your credit score and that understanding and making sure you're taking control of that element of your life. So yeah, as always, with all elements of your financial well-being, that is just so key. So thank you. Campbell, do you have any final words of wisdom you'd like to share?
I'd like to share a couple of very quick tips, Zoe. The first one is the importance of reading the product disclosure statement. Dive into it, understand what you're covered. It provides you with peace of mind, and it also means that if that policy isn't quite right for you, you can explore other options. So making sure that the policy is right for you is essential. You don't want to be caught out later simply because you haven't understood what you've purchased. The second tip is that when your insurance comes up for renewal, it's a perfect time to actually have a quick look at the policy and the sum insured, that's the amount of cover that you've nominated in your insurance. Use one of the free calculators and check if you have enough cover, because underinsurance, as I mentioned earlier, underinsurance is a chronic problem in Australia. About 8 in 10 house owners and renters believe that they're underinsured for their home and their contents. And about 1/3 of households risk underinsurance because they don't update their contents policies to cover any new possessions that they have, or homeowners to update the cost of rebuilding their property for when they've done renovations or modifications to their home. So they're the two tips I have. Understandinsurance.com.au has extensive resources on these issues.
That's great. Thank you both very much. And like as we've said, that having a strong understanding of your financial position and positioning yourself strongly to be able to manage debt and use debt effectively through your life, and also making sure that you've got those buffers and insurance covers so that, you know, when our plans don't go to plan, which as we all know, either in our own lives or people around us, that happens, that we're not undermining the good work we've done so far. And that's really the purpose of insurance. And so obviously there's some great resources around, and we encourage you to use them. So you'll receive the recording, and there is resources we've mentioned, and also a discount code for the next 6-week Money Makeover program that starts next week. And please share with us your #1 action step towards achieving your plan, or simply just make sure that you have one in your mind and that you go and take some action. Go and check your credit score, or go and review your insurances, or just go and look at the Understand Insurance site and have a think about some of the scenarios that are real in your world, and what you might do about them, and if you do need to review your insurances. So thank you again to our really generous partners for helping us you know, provide these free resources. Thank you again to Dirk and Campbell for joining us. And if any of you want more, please do the 6-Step Money Makeover program, where we go into more depth about debt management and insurance and goal setting and investing and building your professional support network. And we explore resources like the ones we've discussed today. So thank you all very much for joining us, and happy planning.